this is a really, really key point about charts, about classical bar charting, and about how to trade them, is that the different representations of the same market, if you change the time period over which you're looking at the market in, for example, bar charts. It's true of most charts, but it's particularly true of bar charts. There are two variables here. One is the time period over which you're looking at the chart, and secondly, the time interval creating the individual bars. And the point is, the general point is very simple, that there are patterns within patterns and trends within trends. So what may be over a 10-year period of a market, the market may do this, which is a famous reversal signal called the head and shoulders. But if you're only looking, if this is 7 years in, 5 and 3, if you only look at this part, all you see is a bear trend. You don't realize that there's a massive pattern driving that bear trend if you just look at the last 3 years. If you look at 5 years, you still just see a bear trend. You don't realize the preceding trend, which is that. You just see this bear trend. But if you look at the whole thing, you see the massive implications of it. So what I'm saying is, the longer the context you look, the more you see. But make no mistake about this, that there is also something you lose by extending your time frame and typically increasing the intervals represented by a single bar. You also lose information, which we saw stuff before. For example, and this is difficult to do by hand, but basically we saw, did we not, that if we do lots of small bars, imagine we do an hourly bar chart, you get an awful lot of price information and noise represented by an hourly bar chart. If you then turn that hourly bar chart into a 4-hourly bar chart, you get this 4 is represented by 1, which is a simplification, but it's also a loss of information. And sometimes you'll see patterns within the 4 hours that are lost if you represent it by 1 hour. I'm saying, I think, quite a simple thing in a complicated way, which is that you need to maximize the information and understand that when you maximize, you need to take a long view and a short view to gather all the information in a market. And the way to do that is to look at both the very long term, the medium term, and the short term, to extract as much as you can about the long-term situation in terms of patterns and trends, the medium-term situation, and the very short-term situation. And then you put all three together to build a whole picture. And this is important, not just if you're a long-term trader, but if you're any sort of trader. You need to know all the forces at work on the market at any one time.